Amazon really kind of testing their investors' patience. The stock's getting hit today after yesterday's earnings. Help us break that one down. John Janarone's here, heard on the streets.
Morning,
Not a great report from Amazon last night.
No, it was really worrying, and you know, I think for a long time people let Amazon get by with you know, not so impressive margins. I mean, for the last several quarters, I should say actually the last few years, the company's operating margins have been shrinking, but people haven't worried too much. Amazon is treated very much like a growth company, even though it's huge, right? I mean, you know, $80 billion market cap. I mean, people look at the top line and stay excited about it, but when the company comes out and misses, well, what spooked people was the guidance. So
but you know, talking about the operating margin quickly for a second. When I saw that in the release yesterday, it was 1.5% was their operating margin. You talk about razor thin margins. I mean, that is razor thin.
They're a retailer. Who thinks they've got, you know, who thinks they're any different than a supermarket?
Right. Well, let's talk about the guidance. Now you mentioned that.
Yeah. Well. So the guidance was for, you know, well, the guidance range included an operating loss in the first quarter, the quarter that we're already in now. But on top of that, the revenue guidance was below what the market was expecting. So if, you know, you disappoint on both of those counts, I'm not sure that the model can keep working, because in the past, you know, Bob's right, 1.5%. I mean, it sounds unbelievably low, but people didn't care because, I mean, it's true. I mean, Amazon has been taking share, you know, across the board. I mean, we're not just talking about books and electronics, all kinds of categories. So it's a great business, but, you know, what I argue is that at the point, you know, the revenue growth isn't off the charts anymore. I mean, people are going to start paying attention to this stuff.
Okay, and tech companies have done this historically. You look back at a Microsoft in the 80s, you know, all of a sudden you stop being a growth company. And
well, you know, you just said it. You said they're a retailer. I mean, they're even a tech company. You know, I mean, they're really even a tech company. And, you know, I want to talk about the Kindle for a second, because that's a big issue, too. And that's what you're writing about. You know, they've been plowing a lot of money into that. And investors have patiently waited for the payoff. How much longer are they going to wait?
Well, it's hard to say. I mean, I think that one argument you might make is it's very smart to offer the Kindle at a really low price, as they're doing. My colleague Martin Pierce wrote some time ago that they're probably selling it at a loss based on what the cost is. You know, $199.
So what? You're making it up in volume?
Well, yeah. I mean, well, no.
We're losing $20 every time you ever use it.
Ebooks and you know,
but they're selling those cheaply too. I mean, the argument, or one argument you can make, I think, is that one of their competitors is very weak. So Barnes & Noble, of course, you know, is, I mean, talk about a weak balance sheet. I mean, you know, they're really struggling. You know, they've got a great product, but if Amazon can knock Barnes & Noble out of the picture, I'd say that, you know, the investment would be worth it.
Well, but they're still trying to rewrite the rules of things like book publishing. I bought a novel by George Palakinos last week for 99 cents on my Kindle. Who's making money selling
and George
the art?
Thanked you for it.
Yeah, and George was happy when I was getting it.
Right,
but
George was happy with the sale.
You know, 99 cents. Who's making money off that?
Well, that's why your operating margin is 1.5%.
Well, yeah, that's just it. I mean, you know, I think that you might say some companies would maybe price the media at a lower price, but then try to make money on the hardware. But they're pricing everything really low, and it's coming through the numbers.
The last word, John. I mean, are investors going to have to wait more?
Yeah, I mean, I think. Well, look, I think in the next few quarters, I mean, if we see them stay kind of on the border of profitability on an operating income basis, I think that, you know, investors are going to get scared. So.